Welcome back to our special show, State of the Economy. I have been speaking with Sowmya Kanti Ghosh, Chief Economist at State Bank, JP Morgan's Chief Economist Sajid Chinoy, and CRISIL's Chief Economist DK Joshi. The first question to you, Sowmya, with GVA for the fourth quarter falling to 5.6 and the overall growth also showing slowdown in the second, third and fourth quarters of last year, now will we get a different stance from the Reserve Bank? Inflation low, growth in need of help.
See, I think the RBI recently has changed stance from neutral to neutral stance. So I think it may be a little difficult for the RBI to get over to an accommodative stance at this point of time. But because see, there are two things happening over here. Clearly, the RBI, the central bank prognosis, if you find in the April monetary policy report, if you look into the GDP numbers, that has decisively changed from there, because now there is a slowdown which has started to happen before the beginning of the demonetisation setting. So that's point number one. The point number two, the only problem is that even though you may get a significantly lower inflation number in the next 2-3 months, sub 2% number inflation also possible. So in that case, the only elephant in the room is the liquidity. But because I think around out of the 5 lakh crores which came into the system from November 28 till May 12th, a significant amount of that money is still sloshing around in the system. So in my sense, the RBI may still be a little bit cautious on the policy stance, but definitely it could give out a signal that it is willing to be accommodative if the inflation data stays soft and growth doesn't pick up in the subsequent quarters.
Take your point. Sajid, very quickly, any nuanced shift in RBI policy?
Latha, we're discussing water under the bridge, right? This is all in the past. The question for the RBI is what's going to happen to growth in the future? And there, I think all of us need to make an assessment about the second half slowdown. Is it temporary? Is it cyclical? Is it driven by demonetization? Or is there something more ominous? Because if it's the first interpretation, then you should expect some rebound next year. Now, I'm in the second camp where I think ever since the terms of trade shock from oil wore off, we were slowing. And apart from exports, I don't see too many triggers for higher growth. So the first assessment for the RBI is, do they have conviction that growth accelerates next year? But even if they do or they don't, remember the mandate is squarely on inflation. So it almost matters less what the RBI's view on growth is. It only matters to the extent that their view on growth influences their view on inflation.
For the moment, I just have a minute or two left. So quickly, if all of you all can tell me your forecast for the current year, given I know it's too much of material to analyze, but if you can broadly give me an idea of what kind of growth you all are expecting in the current year. Sowmya, you go first. You're working with a base of 7.1.
See, in terms of growth rate, we are still revising our forecast because we are looking into this data very closely, but we are working with a GDP number of 7.4% for this fiscal.
Okay. Sajid, what were you working with? And after looking at this 5.6% fourth quarter GVA, are you going to revise your number for the current year?
So we were working with 7.2% for 17-18 on the back of a 7% number last year. I'm inclined to stick with my number of 7.2 or 7.3. So growth that's essentially flat. The main upside comes from exports, if that continues.
Okay. Mr. Joshi, your analysis of how you may see the current year pan out?
We started this year with a 7.4% growth forecast in January, and we are sticking to that. And I think this data also doesn't surprise us on the aggregate, because I think the overall estimate of GDP is still 7.1%. So I don't see any revision in our number because of this data.
Okay, that's very important. All our guests believing that there is no need to revise their estimates of the current year GDP. To that extent, the bad news of FY17 is bad news of FY17. It is not percolating into further bad news for FY18, the current year. Sajid, Sowmya and Mr. Joshi, thank you very much for joining me. Well, the key takeaways on the GDP analysis, state of the economy. Yes, the economy has definitely weakened in FY17. The slowdown started in the second quarter itself and slowed down further, probably because of demonetization. That's the first conclusion from the GDP numbers and our expert analysis. The second one, the fourth quarter being excessively low at 5.6% GVA is probably exaggerated because of the price play. Prices fell very sharply in the year-ago quarter and rose very sharply in the fourth quarter of FY17, especially in metals and stuff like that, and that may exaggerate the slowdown. That's the second takeaway. The third takeaway, however, is that there is genuinely pain in the economy. If you looked at construction, Q1 to Q4, there has been a contraction. If you looked at financial services, a growth of 9% in the first quarter and 2% in the last quarter. All these are indicating that the economy definitely slowed in FY17. However, the good news is that the economy is seen healing, and most of our guests have not revised their forecast for FY18. Will this have an impact on how the Reserve Bank looks at economic growth and whether it is willing to believe that inflation is anyway slowing, so there is some accommodation that they can give? That's the big question that the market will grapple in the coming week. Thank you for watching this edition of State of the Economy.